What's up? Good morning. Welcome to Trading Live with Bubba. And there's not much to trade. As we've been watching, we had PPI this morning. The market's tanked and have rallied all the way back to basically positive to unchanged in the S&P and the NASDAQ. Russell, after yesterday's big day, is getting clobbered today. But again, I urge you to understand that there's not a lot of trades to make, because one of the things that we base our theory and our thesis on is that we'll get enough trades to make. So if I make a couple of bad trades, I'll still have a chance to get out. So far, I mean, I traded live with my members through the PPI number this morning. And again, if everybody was real experienced, we would have had 3 or 4 trades, all winners. We took one, which is a winner. But at the end of the day, there's really not that much. And there hasn't been a trade really since. You can see the markets are all kind of consolidating and not doing a lot. So I think to learn that the decision to make no trade is the same as making a trade. And I think you have to be more prepared to sit it out, okay? Because again, in this kind of market, that doesn't mean that you're not putting on a longer term position or you're building an options trade that can take advantage of the short term, nothing to do, and looking for something out in the future. But I think you have to understand that sometimes from an active standpoint, you can't be active. There is no reason to be active because the markets aren't signaling anything to be active. There's no speed to this market. There's no chase. There's no panic. There's no FOMO. It's just grinding, and the markets will continue to grind higher until they don't. But as long as it remains slow, the probability favors the upside. Okay, because again, there's new money flows in every day to the upside from funds and 401ks and things like that. But in general, we may have seen a top for a while, but I wouldn't be anxious with the current activity to be an excessive seller here. I think you really want to be really patient and wait for your opportunities. Some of the trade you can do some calendar spreads if you have a lean in a direction. You can go out and, let's say buy the September calls or puts or both and sell daily or weekly, depending on what you're doing, to keep lowering the cost of that, not expecting much movement to happen here, which is a way to play it. Or you can sit it out and wait. Now, again, we're going to watch and see if anything shows up here. The one we talked about the other day, Lily, notice, look at the bounce we got. And this is a high probability setup. So these are trades you can make, and you can make them a couple of different ways. I think that, again, you have to be willing to be able to adjust and be willing to make some ideas and look at your ideas and look at the market, look at the chart, and make sure that your opinion or your belief is measured and shown in the chart. In these charts on the short-term basis, there isn't a trade I could possibly make. Every trade right now is a potential coin flip, okay? So why would I want to trade a coin flip when I can get an edge, okay? And I think that, again, this is something that you have to remember. Even gold, which is under some pressure, it had one chance to buy. I did not make this trade, so I always tell you, but this was the one chance to buy it, and it came right back down. It did make money if you would have made the trade, but again, I didn't make it, so I'm not going to brag on how good I was at the trade. I just want you to realize that these are very challenging conditions. They don't get much harder than this. And of course, remember, it's summer. Okay, it's slow anyways. And this is the slowest 2 weeks of the year, other than the period between December expiration and New Year's. The trading desks, they have their D teams on right now. Okay. They have guys just watching it, guys and girls, not to be politically correct. So look, one of the things you have to make sure as a trader is sometimes there's just nothing to trade. And this happens to be it. Now we will just take a look at some of these stocks. I'll give you some ideas if you're interested. Again, I'm not doing much for myself at all. Apple certainly a sell, not a get short sell, but a premium sell. Okay. I would look at selling calls, but personally, again, I'm not going to do anything. Okay. But that's what I would do if I were going to. But again, I'm just hanging on. I have positions on. Don't get me wrong. I have a lot of positions on, but I'm not adding in here. Amazon, nothing to do. Coin, nothing to do. They're all in the middle. And I'm using what I'm looking for is I'm looking for oversold, overbought. Okay. Because without real action, okay, crowd we talked about the other day, it did pop a little bit and it came back down. I mean, it's still in decent shape. Ethereum, this would certainly be one you would sell some call spreads on if you were going to make it. Again, I'm not encouraging you to trade it. Covered calls or call. I would sell call spreads. I don't ever sell covered calls because I don't want a big move to take me off a position. Okay. So if I sell spreads, I get a little bit less credit. But if I do get a big move in the stock, I get to hold on to the stock. Does that make sense? Because it takes me in and out. I just take the loss on the credit, okay, versus the loss and have to get out of the stock or have to chase up and actually make my basis higher. I hope that makes sense. If not, let me know and I'll try a better way to explain it. But I don't ever sell naked options, okay? I don't see the reason to do it. For those of you who like to sell puts naked, you go, well, I want to own the stock anyways. But you could create a put spread and get almost the same credit and not have the same margin risk and not have the same exposure should the end of the world happen. So there's always better ways to do things. Okay. There's always better ways to do things. And because options are so flexible, you can do a lot. Okay. But whenever I tell about selling, it's either selling call spreads or put spreads right now. And the difference is on some things, I would sell deep in the money spreads, trying to create a synthetic put or a synthetic call. Okay, which I did in Lily. Here, let's just go back to that in a minute. Okay, in Lily, I sold the 655, 625 spread. Okay, so I'm doing pretty well with that. Okay, and that was the put spread. So the put spread is now worth zero. I mean, it's still got time, but it's generally worth zero. So again, it's just things you got to keep in mind when you're looking. Meta, really not much to do. Google, probably a sell. I mean, Google, I would look to sell call spreads, but here you are fighting again. This is all about time. Okay, that's what you're trying to do. You're trying to take the benefit of time based on a market that is overbought or oversold. In this case, overbought, and hoping the clock runs out. Okay, because remember, when you sell spreads, you don't need the market to go in your favor. You just need the market not to go against you. Okay. So, and INOQ, nothing to do. IWM is certainly one you might want to sell some calls. So we talked about that the other day. If it got to 230, it did get to 230. And if you took it yesterday, great. If you didn't take it, again, I don't hold anything against anybody for not wanting to trade in the current environment. Okay. I don't want to trade in the current environment. I've been doing this for 47 years. No, I'm not mostly a seller. Okay. I'm almost always long volatility. I like to create like a lot of what I call weighted double diagonals. So I have an extra call or an extra and an extra put. So if I get a big move, so I'm selling in the SPY, for example, I'm selling daily. Okay. But I have extra options in case it makes a big move one way or the other. Okay. That's what I'm looking to do. Those are the kind of trades I like to make. But there's always a selling component involved. Okay. Because I don't trade too many naked options. Typically I build a position based on what I want, on a direction or neutral. Okay. And so I'll do a lot of weighted double diagonals, okay, which is like if I were going to do the SPY right now, I would, let's say, sell. I'd sell the 650 call for tomorrow, sell the 640 put for tomorrow, and then go out to September and buy like the 652 call and buy the 638 put twice. So I'd be 1 by 2 by 1 by 2. So if I get a big move up or down, I can get paid off on the extra option. If it stays inside range, I'm going to collect every day and bring down my debit. So that's a lot of trades I like to do. In fact, let me see if I can show you one. I'll show you one I put on with my group. Hold on one second. Well, here's one we did in IWM. Here, I did this on Saturday. Okay, I put it out. Okay, so in this particular case, we've collected about $50 a day. Okay, in credit, and then we got to roll up in the extra call because you can see there's 2 calls. So now the position is short one, long one, and then long one at 231. Okay, which I've already taken a $5 credit out of, and still long 2 puts. Okay, so that's the kind of trade we're doing. How about defense on those diagonals? Do you take them off as a pack? No, I would keep rolling the short options every day. Okay, and eventually, the hope again, the math. If you look at the credit you're collecting, the math will normally cover the debit of the trade if everything stays right. If you get a big move one way or the other, you get paid off the other side. And on many occasions over the years, not only did I get the rally to get off the extra call, then I got the break to get off the extra put. So again, it works really well. Okay. And again, the problem for most people with a trade like this is this trade to put it on one time. This trade to put on one time is a debit of $1,478 plus the spread risk. So $1,678. So $1,600 to put it on. Okay. And again, that debit comes down every single day, but not everybody's got accounts that are that size. And of course, you also have to worry about the day trade, the pattern day trading rule too, in case things happen. So again, but they're great trades if you can do them. Okay. And that's what I do a lot of. I mean, here are the ones I did just put on. Here's one of them, and then these were on from Saturday. Here's the SPY, $2,900 debit, and here's the Q. Okay, so those are the trades that I put on a lot. I have those on almost always. Okay, those trades are on almost always. Okay, and again, there's very little risk to them. There's a lot of potential upside. So why not use it to your advantage? But again, you have to have an account that can handle the debit, because I just showed you 3 trades that were about eight or 9,000 in debit to open. Okay. In the meantime, we got nothing going on here. We're just sitting around, but we'll see what happens. I'll finish off the rest of the stocks you can look at with me and get my read on them anyways. MP. This one should be sold put spreads. Call spreads. If you want, I am not selling. Again, remember, I am not making any of these trades I'm talking about today. Normally, I'll put them on right when I'm talking with you. Today, I'm not interested. I got to go enter all my Vegas contests today, so I'm not going to be around to do anything anyways. It's not peanuts. It's money. And again, when I'm talking with people of all different size accounts, I have to make sure they understand the money that they have to put up to do so, right? Again, I've been doing this for basically 47 years. So I go back to when there was not put options. Microsoft, nothing to do. MSTR, getting close to sell some put spreads. NNE, I'm sure there's nothing to do. I'm waiting why my stuff is so freaking delayed. Nothing to do. Nugget was a sale the other day. We talked about it. Again, I didn't make the trade, so I'm not telling you should have. NVIDIA was a sale we could have made. Palantir was a sale we could have made. So you get the idea. Most things you're going to find today, most things are at the overbought territory. Okay. Even though the markets go up every day, they're going to be overbought. Let's see if we're getting any action in our potential day trading. So you can tell when there's no action in the market. When the Bollinger Bands start to narrow, okay, that means we're going sideways, and there's no real action here. So again, I don't see much. But great, thanks for the questions. It's always great to have participation. If anybody else got any questions, feel free to fire them in. But I don't see a lot to do here. I would urge you, especially if you lack experience, I would urge you to observe the market and not get too active in this market. This is a very dangerous time, no matter which side you take. Doesn't matter, okay? Because you can get what we call the vacuum effect. Markets can move extremely fast on no volume, okay? And if you're using a stop in a trade, you can get easily stopped out. And if you're not using a stop, you can get yourself under a lot of pressure. And I think it makes more sense, okay, to observe and be prepared, wait for better action, okay? So due to the lack of anything really to do, I think we will call it a day. Again, just be careful. I'll see you back here on Tuesday. And remember, every morning I do an update before the markets open so you can get an idea what I'm thinking. Have a great day. Have a great weekend, everybody. We'll see you back here on Tuesday.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.